Welcome back to the Rational Millennial. I am your host, Michael Lindner. And today I want to dive into a little bit more about a topic that's been brought up. I had a couple of friends reach out and ask me, where I do most of my trading. So I'm going to get into 3 reasons why Robinhood is not the app to go to for both equity trades and options moving forward. If you have an account currently, that's fine. If you like the app, I'd love to hear some of your feedback on things and what you like about it, maybe why you opened it in the first place. But I personally am not a fan of the app. Talk to you about a couple, I'll mention 1 or 2 other trading platforms that I believe are much more robust and will help you in your journey to financial success and creating the largest portfolio possible. Any tips and recommendations I have, again, this video is for entertainment purposes only. I am not directly recommending any stocks or securities for purchase. I'm recommending, these are just things that I like. These are opinions that are my own. So I'm not here to make financial recommendations and guidance. Again, these are just things that I like, things that have worked for me. So without further ado, let's dive into today's topic. And again, if you like some of the things I'm going to talk to you about today, please feel free, drop a like on the video, subscribe, click that red subscribe button down below, as I will have a lot more content for you here in the coming weeks and months. We have a lot to discuss. Again, this is just a kind of a very informative video about why I do not like Robinhood. Again, not too sure. Let's dive in. If any of you have heard of news recently over the last, let's say, 6 months or so about the app Robinhood, it claims to be a commission-free stock trading and investment app. I don't know, I do not know if they have a pretty robust trading platform where you log in and do it online. I do know you do have the ability to place trades in your account from their website. I'm going to go ahead and pull up the website here of Robinhood, and this is one of the main reasons. I had a friend reach out a couple of weeks ago, talk to me about why he started his Robinhood account, and I think this is pretty common among folks that I've heard. Is they started out in 2013 in Menlo Park, California. They were the only, at the time, the first and only commission-free stock trading app available to purchase any marketable security, any equity or stock. You can even buy options, I believe, early on as well. And they positioned themselves as commission-free, right? So you pay $0 fees to place trades. That was pretty innovative. Not many other companies out there were doing that at the time. I was working for Merrill Lynch on an advisory team. I was working with certified financial planners, and our platform did not have free trading for stocks. If you placed a stock trade on merrilledge.com, there was a $6.99, $7 fee. And if you bought the trade through us, you called in and talked to me, and I could place the trade for you. It was typically ranging the commission anywhere from $25 to about $75 per stock trade, even going up to $150 sometimes, depending on the size. So reason for it was one of the first apps available on the App Store that let you place trades completely for free. And their other kind of pitch, I guess you would say, is the fact that they would give you 1 free stock if you opened an account and funded it within a certain period of time. The 1 free stock, however, if you look at their disclosures, they typically will give you a stock or a portion of a stock ranging from $2.50 to about $10. So they're going to give you very minimal money for opening an account, basically. So you're doing trades through them. The thing that I don't like, again, recent news that came out within the last 6 months, a younger gentleman, pretty new in his trading career. Well, he opened a small account, didn't understand options. They approved him for option trading. He went ahead and put through a bunch of call option trades, did not have the money to settle those trades when they were not in the money for the option. So he lost, he did not win out on the trade. And he ended up losing multiple $100,000, nowhere near that dollar figure to settle that amount. So fast forward a couple of weeks later, he ended up committing suicide. And really a sad story. Heart goes out to his family. It was really sad to think that there are 18, 19, 20-year-olds on these apps that do not understand they don't understand equity trading to begin with, but they also, even more so, are for some reason getting approved for options trading, which is very, very risky, super volatile. If you don't understand how options work, I highly recommend not buying them. I personally do not buy options because, to me, there's plenty of other ways to make money in the market. So those are two reasons right there why I do not like the app Robinhood. Final reason, again, I told you I'd give you three, is the apps. There are companies out there like Fidelity, MerrillEdge.com, TD Ameritrade, Charles Schwab, you name it, there's tons. Fifth Third Bank, they all have great platforms. They're very easy to use. And on top of that, I'm going to show you a little bit here. I'm going to go through the website, pull up Fidelity.com for you here. If you see it, you'll see it here on my screen as well. You can go to Fidelity, and when you go to purchase, let's say you're just buying stocks, right? If you want to just buy a stock, very easy to do. The trading platform is simple. If you want to buy fixed income, you want to buy bonds, mutual funds, ETFs, very easy to do. But on top of that, they have their own discretionary mutual funds. So Fidelity manages 80 to 120 of their own no-fee mutual funds. You pay nothing up front to get in. You buy it however long you hold it. As long as you held it for the specified period of time that it's stated in the disclosures, you can sell out of that for no fee as well. So all you're going to pay is that small management fee that any money manager is going to charge you to buy one of these products. They're fantastic. I call them, a lot of them are sector funds. So whether you want a healthcare strategy, you want biotechnology, whether you want tech, industrials, transportation, you name it, they have a sector fund available for you. And a lot of them are really good. They're top performers. Some of them are 5-star funds. And if any of you out there, if anybody watching likes buying those specific Fidelity sector funds, drop a comment in there. I'd love to hear from you, maybe why you started it, why you like Fidelity as well. Again, I'm a big fan of the company itself. I'm not paid. This is not an advertisement for them. I have never worked for Fidelity. I do have a few friends that I used to work with in the industry who are working there now. And they've said nothing but good things about the company as well internally. So those are a couple of reasons why I don't like Robinhood. Again, not saying it's not an effective platform to place stock trades. They had a great mission when they first started, but now, you know what? It's 7 years later. Everybody's doing commission-free trading. You can buy stocks for absolutely no cost on Fidelity.com, again, on Merrill Edge, on TD Ameritrade, they're all free. So the differentiator for Robinhood is gone. They don't have a lot of their own research. They don't have their own discretionary products. To me, it's very, very kind of low-grade, low-end company. They don't offer a lot for potentially what you're giving them, which is, for some people, their entire life savings might be at Robinhood. So don't think you're getting a lot of bang for the buck. But if you happen to love them and you want to list a reason or two as to why, please drop a comment in as well. I would really appreciate it. And I always like to read through the comments on my videos. Anyway, that wraps up this episode. Again, short and sweet. I wanted to get right to the point, down and dirty. Next, I will be reviewing some of my top holdings and what I like in the market here moving forward. We wrapped up a little bit of a down week here in the markets. Second full week of trading, but I'll get into that. Again, drop a comment, like the video if you can, really appreciate it. Subscribe to my channel, click that red button. Much more of the Rational Millennial coming at you here as we move forward in 2021.